generation of tools. It's really built to make cybersecurity easier.
About cyber insurance that I would start by saying is that it is changing all the time. There are new modules of coverage all the time. And all these insurance companies that get involved like to call these modules different things. Cyber extortion might be ransomware for somebody else. Social engineering might be phishing for somebody else. And, you know, there's always been a coverage out there that's been available and that we've been selling to clients since I've been doing this, which is over 20 years at this point, called crime insurance. Well, where better, or where would you think that something would be covered when something cyber related happens? And people say, well, I have crime insurance. Yeah, but like you just said, Matt, that's not the correct insurance, because that is more physical loss of merchandise or cash or something along those lines. But I think the misconception that, you know, their current insurance package has what they need is probably one of the biggest misnomers out there right now. It is extremely important to have a segregated cyber insurance policy in order to make sure that you're picking up all the correct coverage parts. A lot of the providers right now, the small business insurance providers, all the way up to, you know, providers that insure people up to $50 million sales, you know, businesses, they will include what I would consider token amounts of coverage, or if you want to call it diet cyber liability, you know, these little snippets that are out there. And people say, well, I have data breach. Well, I have, you know, what I need. I have a $50,000 limit there. Maybe they don't even know their limits. But to have a separate policy gives you comprehensive protection. And if that's not something that's been looked at, it should definitely be looked at. And you brought up, you know, some of we can all talk about the horror stories on the large, huge businesses that we hear have suffered cyber attacks. The new news is it's not just large business anymore. It's mostly small business. And that's where we're seeing these things take place. Having a partner that can identify where your system might be penetrated, and then having gone through an underwriting exercise with an insurance provider via application and requesting that coverage is a great way to start, and to figure out where your vulnerabilities are, and then to properly protect those vulnerabilities, because insurance companies have been and always will be for profit. So if they see a vulnerability, they're not going to offer coverage for that part. And it gives people an opportunity to fix that hole.
I've heard some jargon here, some industry jargon.
Sorry.
Let's just rewind back to the beginning, which I get it, because like we're deep in this space. But you talked about it's. Well, first of all, it sounds like particularly small business insurance buyers that are really bearing the brunt in terms of loss, like the size of the loss per employees in the business. I know they're at the high end, right? Per the number of employees in the business, small businesses are having the highest loss size, right? Because they have less protections in place. And large business, even though they're larger targets, they've been doing risk management exercises for a long time, right? And in the small businesses, they need navigators, and I think by default, a lot of them are going to their hometown. Whoever sponsored the Little League team, right? But whoever sponsored the Little League team may be an expert in finding a home or a car policy or a simple GL. Mm-hmm. But you mentioned something, I think you said a segregated policy, right? Mm-hmm. And I think that I know when you walk into some of these agencies, they say, well, you've got a cyber like unit or a rider on your right. CGL, right? So explain what you mean by a segregated policy and why small businesses need to care.
Yeah, that's great. I'm happy you're giving me an opportunity to clarify that, because we do get a little jargony from time to time. And for more fun, I can go through insurance acronyms if we have extra time. About 1,200 of them. But that's exactly right, Matt. You might have uh, on your business policy an identity recovery endorsement, which means some small policy language that has to do with identity recovery or data breach or cost of notification. So if you do experience a data breach, you may have a statute requirement that you notify all these people. But the depth of those coverage parts and how that policy language is constructed and the limits that are offered are not as extensive as if you have a distinct, separate cyber insurance policy in which you get broader policy language and you get higher limits. And I'll tell you, if you're dealing with a data breach and you have all your customer information on a machine, just the cost of notification and offering credit monitoring, you are now out of coverage. And you haven't even started yet, let alone the cyber business interruption, what it cost your business and customers and business because you were down for that time period. That's not a snippet on your commercial insurance policy program that you already have. If you don't have a designated separate policy, you very well may be underinsured and badly.
Yeah, I've seen that a lot. When I was a claims adjuster at HSB, a lot of those claims were, reinsurance claims. And so I was adjusting claims for companies that had a rider on their CGL or their BOP. And a lot of times they didn't even realize that they had any coverage at all. So I've seen coverage, limits from 10,000, to 1 to 5 million. But I definitely ran into a lot of situations where, because this is just an endorsement that's been tacked on, there are just not enough limits to, pay for the full cost of forensics or the full cost of notification, for example. I actually had an insured that I felt very bad for. He had a small business and he had that business for about 30 years and he was in healthcare. He happened to have data for every patient he had ever served. And his limits were abysmal. Luckily, HSB partners with a lot of great, vendors, and we were able to work something out. And it turned out, after it was investigated, because not every ransomware is going to involve data access or data theft, this particular healthcare provider was lucky enough not to have to provide that notification. But they definitely walked away from that claim with a pretty hefty bill that they'd have to take care of.
Yeah. And for those of you who thought I was kidding about the acronyms that we're going with, CGL was Commercial General Liability, BOP is Business Owners Policy, and HSB is Hartford Steam Boiler.
Whether you're an insurance company trying to craft a policy around that to help reactively, or whether you're the insurance agent, maybe you're a general lines agent and you want to get into cyber liability, it's really, unless you're a specialist in that specific line of business, it's really hard to keep up with how fast things are changing. Yeah. And don't even get started on the business owners, who are wearing so many different hats, as they're just looking for guidance. They're looking for the MSP to come alongside them and help guide them and educate them, or they're looking for their insurance agent to help them understand what the coverages are and what they're responsible for retaining or what their deductibles are. It's just, I think it's a opportune time for everyone to come together and really attack the issues.
There's different insurance products out there. They get pushed by carriers. Down into in the U.S., we have brokers and then agents that actually are licensed to bring these into end organizations, right? And there's a bit of a negotiation between the end customer and the brokerage or the agent on what coverage they should be getting, and sometimes it's based on what risk they're trying to manage, but the reality is they may be uninsurable or they may be minimally insurable, because out in the insurance market, much of which is in London in the Lloyd's insurance market, they're making decisions about, hey, look, all the insurance that we're underwriting on the planet, which is then, they're taking the risk from the carriers, who are then taking the risk from the brokerage, who are taking it from the small businesses, right? It's one insurance market, right? They're just, on a random Tuesday saying, guys, the world's more dangerous. Now the requirement's here. And as a small business, you just need to be reactive to that. Like, the reality is people are going through policy renewals, and every year they're getting surprises, right?
Most small businesses don't have cyber liability insurance. If they do, I consider them incredibly mature. Now, larger businesses, that's a little bit different, but most small businesses don't have it. I think it's somewhere around 17%. So, you have the insurance companies trying to make sure that the business is doing the right thing. And to your point, Matt, if you don't have security in place, you're probably not insurable. You probably don't qualify for coverage. The good news is that you do. If you have cyber security in place, then you probably do qualify for coverage. It might be better coverage. It might have lower premiums. It might have lower deductibles. And so cyber security and cyber insurance really work hand in hand, like almost like two pieces of a protection puzzle that offer that business the most comprehensive coverage. I heard someone call it the 1-2 punch the other day, and I think that's right. I love sports, obviously, with everything behind me. But, cyber liability and cyber security really are that 1-2 punch that the business owner needs to keep their business safe in today's, landscape.
Yeah, and
something that a lot of our MSP partners get hung up on is they look at this laundry list of controls and they say, man, if my clients all implemented these, they would be rock star clients, and I would be, I would only need to keep 4 of them on my books because they would pay my bills forever. And and especially some certain carrier apps, I'm not going to name any, but certain carrier apps are extremely, extremely comprehensive, like 12, 13, 14 pages. Like, they're long. And you have MSPs filling them out, and they're saying, hey, if I answer any of these wrong, or if I advise my client on them incorrectly and my client doesn't get coverage, now I look bad. This is on me now. Oh, you haven't been protecting me the right way, Mr. and Mrs. MSP, right? So you're afraid to answer the questions because then it's like, I don't know what's going to affect them. And that's part of the challenge is on those really comprehensive forms where there's a lot of questions. I would say the majority of those questions are all data collection right now. We like to say insurance is a baby. Cyber insurance is a baby. Most lines of insurance have been around for, well, a very, very long time, some decades, some centuries. And they have very in place underwriting guidelines and standards and all that kind of stuff. And what we are seeing in the cyberspace is you had these policies that they just started handing out like candy when cyber insurance first came on the scene. And then when we had the pandemic and underwriting got serious, now they said, well, obviously cyber controls help, but we don't know what any of these mean. So let's just start seeing where the losses are. So they're asking all these questions and then looking at past loss history and saying, okay, when people had these controls in place, they were less likely to be breached. So those are the ones we're going to look for, right? So they're building that out. The problem, and to your point with like the adjusting, and you guys can shut me up whenever. I'll talk about this stuff.
Keep going. Keep going. Rock on.
Part of the evolving industry is just the reality that, like, we're in an industry where every time a new control gets made, the bad guys are looking for another way to circumnavigate it, right? They're going to try and overcome it. So that means a new control is going to be made. So these aren't going to become, I don't think it's ever going to completely settle, but it's not, right. You have to say yes to everything on this form or you're not getting a policy. There are very specific things that carriers are definitely looking for. And then there are other things that, depending on the nature of the risk, those may or may not be necessary. Yeah, so I'll start with the top kind of 5. I would say there's kind of 2 categories here. There's MFA, which is, if you don't have and we're gonna get questions on this, I'm sure. Where do you mean MFA, right? And that's one of the questions on the app. Some carriers are just saying, "Do you have MFA?" And it's like, well, yes, but where? Then you have other carriers saying, "Hey, where is MFA on all? Do they have MFA on all these things?" And then they start asking about things like routers and switches and stuff that's like really confusing. So again, data collection versus not being very clear on what the heck you're asking. And you get these 2 broad camps. But MFA is an important part. We can talk through all the specifics on that. But then you've got security awareness training, because, and I share this stat a lot, 83%, actually it might have gone down. It went down 1 percentage point. Found that out yesterday. The Verizon report came out. 82% of incidents are due to the human element. So them clicking a link, them falling for a credit or gift card scams, all that kind of fun stuff, right? So you run into that one. So security awareness training, carriers are looking at percentages and they're saying, if they're not taking the time to accurately train themselves, are they really going to be a good risk? Probably not. So that's a big one. Backup solutions. Now, depending on the size of the company, you could be looking at something like just segregated backups, so they're not on the network, which to some carriers, things like tapes are okay, which, who even uses those anymore, but still a thing, right? Oh, all right, Tim, there you go. So tapes. But then on the other hand, immutable backups, right? So once that backup is made, it cannot be altered. And that's a so it could vary. That's good. It could vary depending on the size of the business, the risk of the business, things like that. And then you have things like next gen antivirus. They're still asking about.
Based on the 2023's cyber insurance report by a third-party company called Delinea, they had
That's
some
not this
pretty.
one?
Yeah, no, that was it.
Okay.
They had some pretty startling analysis there. Of all their respondents, at least had one exclusion in their policy that would void coverage. And in small businesses in particular, we're seeing that 28% of them were denied coverage in the first place. And of those that did have coverage for cyber insurance, 40% of them had their claims denied due to lack of security protocols during the investigation. So it's just absolute crazy numbers here.
Wait, what percentage is that? I'm sorry. This document's got so many wonderful points that I'm lost. What percent of people, because of failure during the investigation?
Yeah, so 28% of small businesses are denied coverage. So it doesn't even, like, the insurance company won't even take their money. 28% your coverage is denied.
Sure.
And 28% can't even buy the insurance, I should say. And then those that do buy insurance, small business in particular, based on the data of the report, 40% of them had their claims denied due to lack of security protocols. And I think that ties a lot into what we went over earlier regarding the lack of visibility. Yeah, you might be saying yes on that checkbox today. You might be saying MFA is turned on, but in reality, before you get that check from the insurance provider, they're performing a deep analysis. And that's when, unfortunately, claims get denied. Yeah, you said MFA was turned on 7 months ago, but it's not over here.
The money they put aside, right, is what they call loss reserved, right? For every dollar they collect, right, the industry average right now, the loss ratio is 60 is continue rising, 65%, meaning that every $100 you collect, $60 to $65 they have to put in a piggy bank, okay? And they can't touch it. It's not operating, it's dollar they collected from you through that process. Now, after a year, if you have no claim during that year process, then that 65 becomes unlocked. It goes back into working capital. The reality comes down to a couple of things. I think standing on the part of the insurance space in general is that one is we already hit the topic. The correlation to the actual risk is murky at best, right? A form, static, checkbox, dynamic environment. I keep going back. An analog methodology to underwrite a digital environment. That's number one. Second, the underwriting, I think, Matt, you kind of mentioned it a little bit. The algorithm of those are typically coming from more traditional asset they protect. Home insurance, fire insurance. Like my home insurance, right? I live by a hill, by valley, got a lot of dry bushes. Guess what? I'm a higher risk house than the one that, a mile down the street away from the mountain. Well, the mountain ain't moving, my house ain't moving. So the risk itself is constant. It doesn't change from that perspective.
Sure.
Cyber risk, guess what? It is changing like every single day. But if you take that underwriting methodology in place, all of a sudden you're going to find yourself going, guess what? The underwriting is not working. They end up losing the more claims because you might appear to be a safe environment that you're so far away from the mountain, but because of poor security hygiene, you're getting brick left and right. So now the loss ratio keeps going up. It goes to 60, 50%, 60%, 65%. It's just a matter of the correlation of the underwriting is not tied into the.
What is it like to have a warranty? Like, what does that feel like is that like before the claim, after the claim? Is it like instead of a claim?
I could touch that on that real
Nick's
quick.
like,
Yeah. Put me in, coach. And I think I have a quick slide here as well. So when I think of a warranty and a cyber warranty, I like to compare it to the auto industry. In the auto industry, you have car insurance, you have a car warranty. Both are completely separate things, but both are very, very important. What cyber insurance does is it's protection if you have an incident in your cyber landscape or if your data is stolen. Where a cyber warranty comes into play is we're kind of like a check engine light in a car. So we're helping you proactively if there's anything that will prevent a warranty or, in essence, an insurance claim from being paid out. So, for example, in order to qualify for most warranties as well as most insurance, you need to have things like MFA, EDR running. However, with insurance, all you have to do is do a checkbox. Yes, 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 yes. And we've discussed this earlier, and that's one of the reasons why so many claims are getting denied, because the insurance brokers go back and say, hey, you had MFA turned on, when in reality, it's not. So the way that Cork operates, in addition to giving a financial warranty, is that we're also giving a monitoring platform. So this basically ensures that, yes, this user does have MFA turned on, this user does have EDR installed. And as a result of this, I no longer need to send out a questionnaire. I don't have to ask them if MFA is turned on or EDR is running, because we're tying into the APIs of the managed service provider's cybersecurity tech stack that they're selling their client. So I'm seeing SentinelOne checking in for EDR. I'm seeing Duo MFA turned on. I'm seeing all these things. So it's no longer sending out a questionnaire asking them to fill it out as the honor system. I'm seeing it in person before I could even sell them the warranty.